Good morning, everybody. 8:20 a.m. October 14th. Crazy to say the least day yesterday. Crazy. Insane. I'm not gonna lie, I almost caught a little on offsides with a couple positions I had, um, as well as many others were. So there a lot of short covering yesterday. Hope everybody didn't get too hurt. Um, gonna talk about. I mean, everybody knows what happened yesterday. We can talk about in a little bit of why. I just want to go into certain things that I looked at of why we might have bottomed or whatever. So um, let's look at a couple things here. All right, we know what happened yesterday, but I looked at something that was very interesting yesterday, and I'm going to bring that up now. Okay, so obviously, we had here was a huge recovery. I mean, we were crashing in the futures. This is the SPY. It doesn't even show, what actually happened overnight, but still, we opened up down here and look what we came up to, right? Pretty nuts, engulfing 3 days of selling, right? And I was looking at this the other day, but I didn't show it. But I just want to go to a chart of a weekly chart of the SPY. And I want to show you guys something that's pretty cool. Probably should have had this kept this on my chart. Now I ran a fib from the COVID lows to the all-time highs. And if you notice, look at the 50% retracement of the Fibonacci's. And look, I'm going to zoom in here. Here's the 50% retracement. Here's that level right here. Pretty crazy. We literally tipped a toe below it and shot up. Okay. And on the SPY, that low was 348.11, right? Okay, so on the SPY, that number is all right, 348.11, right? Not as significant, but check this out on the SPX. So on the SPX, it's a cash market. The low was 34.91, and here's the 50% retracement. It came right down to it, right? So SPX and futures aren't in sync yet because the contract's still fairly new, young, so they're not in sync. So I don't know if this can show it here, because the ES kind of came down. The low was, this is what I wanted to show everybody. Okay, I can just do a level here, right here. See, in the futures, it came down to 35.02. Now 35.02, that's only like friggin' 2 points away from 3,500 in the futures market. So that's psychologically 35.02, 3,500. I don't know, right? Plus the 50% retracement from the COVID lows, right? Like even on the futures, let's see. Even on the futures market, let's see here. Yeah, see, it comes right down to it. In the futures market, it's it's almost more exact. Just crazy, right? How it came to that Fibonacci 50% retrace. I thought that was pretty cool. I just wanted to point those out, right? Another thing I noticed yesterday. Okay, I'm gonna get rid of this now. All right, we're going to change it up a little today. I'm going to go a little bit because we already know what happened yesterday, big recovery. So just want to look at the market as a whole right now, talk about some news, and talk about what I saw on some charts that I thought was important, and it kind of stopped me from doing other trades. Now, this is the Russell, okay? What I noticed is the Russell still has not made a new low. It double bottomed here, right? It has not made a new low like the Nasdaq and the Dow, and pretty interesting here, right? But what I noticed was here's the COVID low, here's where we were before COVID, okay, and then where we came up from COVID, right here. It was already at these COVID, call it highs, when we recovered, right? It already came to the COVID where we were before COVID happened. And I was looking at that yesterday and I was like, huh, okay, because the SPY and the QQQs have not, right? Now look at the Dow. Okay, I drew a line here really from where the COVID was pre-COVID, before we dropped, right? So we're here. Now look at the Dow. The Dow came to the COVID pre-pandemic levels already. Double, kind of had a double bottom here in the 2 weeks, right? Right. But so look at the SPY. Check this out. This is pre-COVID, right here. It hasn't come down there yet. Pre-COVID levels, it hasn't come down yet. I just thought, wow, the Russell, I thought, even though it didn't make a new low this year, it already came down to the pre-COVID level. I was just like, whoa, right? And look at the Qs. Let's get rid of this Fibonacci. The Qs. This is pre-COVID, right here, around 238. Has not come there yet. Even with this big spike down, it didn't come there. But the Dow and the Russell did. Pretty interesting. I just thought that was very interesting how Dow and the Russell already have done that, and the Russell has not made a new low. It double bottom, but the Qs and the SPY have made new lows, but they haven't went to pre-pandemic level. Very interesting, right? Just thought that was like, huh, made me think, right? Along with the Fibonacci, right? So what happened yesterday, right, was basically a combination of short covering and if you look at the SPY on this chart, right, this is the SPY, but it, you can see where we came down, and we just crushed all these shorts. Crushed, right? Short covering. A lot of short positions. Had the cover. Okay. And a lot of other things happened as well to make that happen. Okay. Now, let's look at that 10-year, right? Check that out. Look at this candle. Look at that wick. We went up to 4. We went up to a high of 4.0. The yields rocketed when we were crashing, and then look at that crush. Wham. So some bomb buying happened. Okay, bomb buying happened. Right, so that was going to take the market higher. Let's look at the dollar. kind of made a high and came back down, right? So pretty interesting, right? Bond markets found buyers, right? So now that we obviously we know what happened, right? So I just want to give some people perspective on what happened, right? So I was came across this on Twitter, okay, that yesterday was the fifth largest intraday reversal from a low in the history of the S&P. It was 2.39%, and then it gained 2.6. It was the fourth largest in the Nasdaq. It went negative 3.15 at the low, and it gained 2.23%. Massive recovery. Just I'm giving you perspective. It's the fifth largest in the S&P 500, largest, and the fourth largest in the Nasdaq. That's just how crazy yesterday was. Okay, that's how crazy yesterday was. And other things that I wanted to show you guys. Okay, now I know some news just came out. Okay, so let's look at that really quickly. I'm sorry to jump around. Core retail sales just reported just now. So let's see what that was. Okay, so retail sales went up. Expected negative 0.1, they got 0.1. So that's what, like a 0.2%. And retail sales month over month went down. Which the markets right now are a tiny bit up. It's probably good that retail sales month over month went down. Okay. Now today we have University of Michigan consumer sentiment. That's at 10 a.m. So just be prepared. Okay. If you're day trading like me in futures or something like that, I probably wouldn't have any positions on 10 a.m. because this is going to move the market. It's going to give a jolt. Okay, it looks like the forecast is 58.7. And then you have their inflation expectations. Then you have a couple Fed speakers today. Okay, so that's what's on the lookout today. Okay. Another thing I wanted to show is, let's just look at the assets. So this is quantitative tightening, right? It's really peaked April 13th of this year, and look, we've been on a steady decline. This is the tightening, right? This is the Fed's balance sheet. And then we really took a drop here in September. Look at that. But then it's kind of crazy. We kind of went sideways from the 5th to the 12th. You can notice the numbers went down slightly, but not much. Okay. So this is the Fed's balance sheet. This is what I say, don't fight the Fed, even though we had a recovery yesterday. But we're still tightening. Okay, still raising rates. So this is now the Fed watch tool. And check this out. We're currently at like say 3% rate. Now on November 2nd, it's a 99.4% possibility of a 75-point basis rate hike. It's almost 0.6 that we're going to get a 50% basis point hike. So, probably priced in already. But so we have to see what the FOMC meeting in 19 days is going to show us, right? Okay, now we can get into some market news. Okay, let's look at this. So we had some bank earnings. JP Morgan is up 1.22%. Wells Fargo rose. Morgan Stanley is not doing so hot. It's down 2.8% right now. These numbers are not updated. I have the real numbers in my thing. Beyond Meat fell. So bottom line is bank earnings is coming. Okay. So earnings season's starting. Okay. So that's going to be another thing for the market to now digest. So that's where we are. Just wanted to show those things. Okay. Um, Give me one sec while I'll pull up. Well, actually, I'm going to pull up where we're at in the market right now. Just give me one second. All right, let's see where we're currently at. Okay. So we got we got Bitcoin and Ethereum up. All right. Now, interesting. Bonds are being bought. This is the 30-year. The dollar's up. Russell is up. Dow's up. S&P 500 is up 0.14. Not a lot. 10-year up 0.08. The Nasdaq is basically flat. Okay. Gold's down 1%. The VIX is down. Silver's down. No surprise that silver and gold are down because the dollar's up. It's inverse. TNX down 1.85%. It's at 3.8. Remember, yesterday it topped out at 4.4%. It's already down 1.85%. For right now, that's good for equities, okay? Now, gas is down and crude is down. And crude is down a lot of because the global recession fears, even though those barrel cuts that they said, 2 million barrels a day. But now there's a fear. So whenever there's a fear of recession, there's a fear of demand for oil. Okay, people are going to drive less. People are going to do less. Okay, so let's quickly go into the leaders and the laggards, and I'll only cover a couple of them. So Netflix is up 1.37% pre-market. Netflix is now doing an ad tier. I believe it's going to be $6.99 or something like that, where you have to watch commercials. It's going to generate some revenue for ads. So that's a positive for Netflix. Boeing's up 0.93, followed by Amazon, right? But Amazon, I would just say Boeing and Netflix pre-market are good. The laggard really is Morgan Stanley at negative, down negative 2.84%. Okay. Some of the sector leaders, JP Morgan, I already talked about that. It's up 1.22%. United Healthcare, followed by Walmart. Laggard, we got Goldman Sachs, AbbVie, and oil. No surprise there, Chevron and Exxon. Okay, as far as the sectors, hottest. This is not what you want to see really. Utilities, industrials, basic materials are the leaders pre-market. Those are defensive, okay, and staples. Those are all defensive. The laggard, okay, is really only energy. Everything else is kind of flatter up a little bit. I'm not saying to read a lot into it, just to give a scope of what's going on, okay? Now we can move over into the market profile. All right. We can see where we're at right now, okay? I can expand this a little bit. Okay. So obviously, you saw the huge gap down here. Okay. We opened up and we kind of held here, and then we just ripped higher. Hence the single prints here. Okay. But check these single prints out here from the news, right? So then they didn't have much resistance when we came back up. Okay. So huge day. Now today, what we need to look for now in the markets, okay, is we knew this was short covering most likely. Now you want to find out in the next coming days is if it just short covering, or we know it's short covering, but is it short covering with new buyers, or is it just short covering and then sellers are going to come back in? That's really what we have to find out in the next couple days. Okay. So my key wall, and I've been talking about this till I'm blue in the face, was this, right? I said if the market got above this wall and held, it's bullish. So I maintain that right now. We're above these most traded price of the month, 3650, and 3600, the most traded price of the week. We are above this now. Basically, all the shorts have been squeezed. Okay, that's why these levels are important. All right, so a huge move. Okay, now we're within the session. All right, but what's bullish, okay, what's bullish is that the most traded price from yesterday is here at the top of the session. That price is 3681. We're above that right now. Okay, whenever you have the most volume traded at the top, that's going to be bullish. Okay, because that means the prices were being accepted. The most volume was accepted up the top. Okay, so in this session, this is the overnight. Here's the low and the overnight, and here's the high. Okay, here's the midpoint, and where price is right here. Price is at 36.88. It's at the mid. Okay, so that doesn't tell us a lot. It just means that we're bullish because look, we're holding these prices. We're holding the prices of the volume from yesterday, the highs. Okay, that is bullish. We're not low. We're not below here. We're holding them higher. All right. So what do we have ahead of us? We have a gap. The gap that, are we going to fill it today or not? Right? We have that above us. That's what's above us, right? Below us, we have the most traded price of the month, 3650. Okay, 3650. So that's kind of what I'm looking at as like, okay, you know, we drop below here, that is not good. We stay above here, we start going into this gap, that it could be a bear market rally. Confirmed, right? Confirmed. Now, just to know where we're at overnight and why we came up here and maybe sold off, okay? Obviously, I'm going to show you that right now. So here is the ES futures chart, and you notice that blue, where that wick hit, is the 20 simple moving average. The futures tagged it and sold off. Literally tagged it, sold off. So that's, a mini wall. Okay. That's what happened in the futures. That's why we kind of sold off here. Doesn't mean it's bearish. I'm just pointing out why. Okay. Nasdaq. Let's look at the Nasdaq. The Nasdaq's battling the daily 9 EMA. Hasn't moved up to the 20 yet. The Russell, interestingly enough, crossed the 9 EMA and it crossed the 20. So the Russell's stronger. All right, just pointing that out. Now we can look at the Nasdaq. Okay, Nasdaq. Obviously, got equal lows here. Single prints on the way up. Okay. Same kind of story. Now, I want to point something else out. I don't want to jump around, but I want to point it out. Okay. I tracked just the monthly VWAPs. All right. Let's automatically plot it. Here is October's monthly VWAP right there, 3678. The ES is above it right now, and we're starting to move. Pushing a little higher right now. Okay. So I'm just telling you, I'm aware of these levels, like monthly VWAPs. Now check out the NASDAQ monthly VWAPs right here. Okay. That's at 111.71. We're below it right now. You can notice the NASDAQ came right up to it yesterday and sold off. Just point it out. Another data point. Just another data point. Okay. All right. So in the NASDAQ, okay, we got that monthly VWAP. NASDAQ is right here at 111.38. All right. Market now is catching a bid. It's starting to look like it could gap up. Okay, because this is the high of yesterday. Price is right here. Okay, still a balanced session. Okay, still a balanced session. You can see right here, it's still balanced. Okay, doesn't give us a lot of information of what can happen. What do we have in the NASDAQ? We have a gap here. I can bring this down a little bit, show you that. So let me get rid of that. So here's our gap. Gap's above us. Notice the ES gap is closer. So I would say, can we get up to this gap, the bottom of the gap, in the next couple days today? I don't know, right? But this is an important level right here. Most traded price of the week, right? 108.80. This area. You want to stay above that area. You go below it, that is not good. Okay? That's what I'm looking at in the NASDAQ. All right, let's go to the 60-minute futures. I'll just give you what's going on with the market right now. While I pull that up, you can see we're green. Okay. Let's go to some key levels and what's happening. Now, right off the bat on an hourly chart, look at these hourly candles. Look at that. Up, down, up, down, up, down. In a range, right? You can clearly see that. That's why I love hourly candles. It kind of just like, if you look at a shorter time frame, it can get messy, but this is really telling you the story here. It's just this range. Okay, and what are we going to do? Right? So now you see it on an hourly chart. The turquoise box, by now, if everybody's been watching me, that's always going to be the most traded price of the month. That's kind of now the bear bull line for me. If we come underneath it and accept, that's probably not good. We're probably going lower. Okay, above us is the gap. Here's the gap right here. We're right up against it. Okay, so with that gap also comes 37.13 resistance. Okay, support 36.62. And then obviously 36.50, which is also the most traded price of the month. Bull bear line right there. The bull bear line. Now it looks like my daughter wrote that, but see, we're popping now above these candles. So we're breaking that right now. Resistance, right? Have a trend line. We're coming up to this trend line and have as well. Okay. And also, what else do we see? Right? We see a supply zone here. Right here. Supply zone. So a lot of confluence at this area. Okay. I want to point that out. That's why I like having, I use only certain things, right? We have, just to give it confluence, just means many levels together. Okay. So 3713 resistance. We have the gap here. We have a trend line here. We have a supply zone here. Okay, that's a lot for the market to push through. All right, so I'm just saying that if we get resistance here and we can't go up, I'm not saying all out short, but there's a lot of resistance here. Okay, that could possibly be a nice short in the futures. If we can't move above these levels, I mean, it's a lot of resistance, a lot of confluence, right? And what else do we have? I didn't mention the other thing. What else do we have? We have the 20-day simple moving average also acted as resistance. So that's another indicator. And again, I'm not saying we can't break it. I'm just saying that that is a lot to go through. So, let's say somebody who only does trend lines. Well, you see the trend line. Let's say you only do supply and demand. You're seeing supply. Let's say you only look at moving averages. That acted as resistance, right? So more confluence you have, the more confidence you have in trading. Okay. So I'm definitely looking at that because, but then what's the other coin? If we break this supply, we break it, right? That bear market rally becomes more of a thing and we can start moving up here. And this is the most traded price over here. This is the volume node over here. So we can maybe possibly go here. And I could get rid of that because I don't want to confuse anybody. That's an old one. But still, it's a high volume node here. So we'll see. Let's move over to the NASDAQ. All right. So NASDAQ, look at that. Trend line, supply zone, resistance, another more confluence, right? So that's the key resistance area, 111.82. Okay. 109.66 is support. Now I'm going to add a level here because it wasn't there before. So I'm going to add a level. Kind of have a double bottom here. Okay, so if we take that out, so that's 110.26. Okay. I'm actually going to, you can see I'm adding levels here. Now this level is not as important anymore. I'm going to get rid of it. So look at this now. We're getting pushed now. We're gapping higher in both. Right now we're gapping higher. We're pushing as I speak. So we're officially gapping up right now. We're pushing higher. So this resistance level is being broken as we speak. The supply zone is being broken. So what do? Get rid of that supply zone. Invalid now. Okay. Here's the next supply zone. Right here. Okay. Next resistance, 112.85. What do we have above us? Like I said before, we have the gap. Can we make it to the bottom of the gap today? So this is the gap. We'll see. Do we get follow through in this move? We also have supply right here, right? So key levels to review. Here's our gap overhead. Okay. We have, wow, we're getting some push right now. Look at that. All right. Woof. Wow. I wonder if there's some news that just happened. Have to check to see if there's any kind of news that just came out. Okay. So I do see news. And what happens is, let's see here. Putin says no need for massive strikes on Ukraine right now. So that happened at 8:55 a.m. Putin says no need for massive strikes on Ukraine. I can only think that's probably what's pushing the market higher. Look at that move. Oh man. Full transparency, I'm long Apple with a butterfly structure on options, so I'm liking that. All right, well, we're now going to be in this supply zone now, so we're gapping higher. All right, so right now ES and NQ are up 1.34, 1.25. The Dow's up 1.2. Okay, notice the TNX. Okay, guys, it's down 2.45%. It's down to 3.8. It was up to 4.0 yesterday. That is very volatile for the bond market. Okay, the VIX is down 2%. Wow, look at that move. Look at this move. Broke a trend line, broke a resistance level. Now look, in supply zone, getting some seller here, getting some selling here. All right. Can only assume that that Putin news is what just drove that market because it just happened. Okay, so just really quickly, let's look at some things now. I talked about key levels before in the ES, right? Check this out. This doesn't count as a gap fill because it's overnight, it's pre-market trading, okay? But we just filled, if you notice, guys, look, we just filled the top of that gap. Here's the gap. We just hit the top of the gap and this level 37.35 and sold off. These levels are here for a reason, okay? So this gap, it doesn't count as being filled because it's not real-time trading hours, okay? That only happens 9:30 to 4:15 on the futures. So this doesn't count, but it's interesting that it came up here and now we're getting selling. Okay? Now let me invalidate this supply zone. Alrighty. Still an important level, right? Look at that. We came right up to it. So that's still a level I got to look at today. All right. I'm going to go into the markup profile to give some broad scenarios for today. Okay. And then we'll wrap it up. So we're gapping up now. Okay. I'm going to getting closer with this here for you guys. This is all we got to really look at today. Okay. Let's do these scenarios, okay? So now, it's funny, when I got on here, it was right here, and now it's gapped higher, right? This is how crazy this market is. So, large gaps are hard to read, okay? They are. So, wow. And just to give you an update, the ES now is crossing the 20 moving average. If it closes above that, the NASDAQ can then hit it. We'll see. Okay. All right, so let's look at this. Now these are the scenarios for today, and it's going to be very broad. Okay. So prices here. Now, obviously, we have 30 minutes to the open. So, again, I have the gap here in the futures. Now, bottom of the gap, just to give you guys the numbers, bottom of the gap's 37.18, top of the gap's 37.50. Okay. So I'm going to go over this very loosely, okay? Now, here's yesterday's high. This now, if we open here, will be the gap. So it's pretty simple for today, okay? If price does a gap and go, and if we stay around here, I could see us definitely, maybe coming in, pushing down and going right for this gap fill around 37.50. Okay, if the market stays strong, okay. Another scenario could be we come down, fill the gap, and still go and fill the old gap. Okay. Now, if we do come down here, fill the gap, try to pop higher, come back down to this most traded price of yesterday, okay, two things can happen here. We kind of play around here and balance, create value here, okay, or we are going to, now just to give you an example here, this is why I love the volume profile. All these people are long. This area are longs, okay? Now, it's their chance to defend this level. If they do, we can still move higher. If they don't, and here's monthly VWAP too, okay? If we start to push, okay, they're gonna feel pain and they're gonna liquidate their position. And we can come down here to the overnight low. We can pop that now, okay? Those longs will get liquidated. Then we come down to my pivotal most traded price of the month, 36.50. We can come down here and get the pop and balance off here, or if we do go below this, we're falling, guys. Okay? Because everybody's long now. So that's it. NASDAQ. Okay. I'm gonna give you guys similar Okay. Nasdaq, where price is right here. Okay. Now, I said this before. We have a gap. The bottom of the gap here, around a 113.50. This is supply zone right here. Okay. So if we gap and go, we could come up here, have a little resistance in the supply zone, pop above, come back, and we can start to hit that gap. Okay, that's kind of more of a bullish thing, right? Again, yesterday's high would be the gap for if we open and we come down. So we could also come down to the gap, bounce off, and also go higher. Now, as far as the bear case, okay, same kind of thing as I spoke about in the ES. Okay, we got longs here. If we come down to the gap, try to bounce, don't, and we start falling and coming down, longs are going to feel the pain and get liquidated, and we're going to come down to this 109.66 level. Okay, we could bounce here, but if we don't and we come down here, this is the line in the sand. Either we balance here or we go below that, we're going lower. Okay, this market's crazy, so anything's possible. Okay, anything is possible. Now, the one thing I have to say is that after a huge day like that, a lot of times the market will take us a day to digest it, a second day to digest the move, because it's just a huge move, right? But in this market, anything's possible. All right. I hope that a lot of the stuff I talked about today helped somebody, maybe shed some light on what's going on in the market. You guys know what I'm looking at because I just showed you. All right. So let's see what happens today. Really, let's see. It's kind of crazy. So please give a comment. Please give me a like. Share with other traders if you can. I am going on vacation, so I'm gonna be off on Monday, Tuesday, Wednesday. Return Thursday. So I'm sure all of you will be dying without my streams. Just kidding, obviously. But I wish everybody good trading for next week because I won't be trading until Thursday. So good luck today. Hopefully everybody gets a green day, and I will see you guys on Thursday. All right. This market's nuts.